All right, traders, welcome to the end of day recap. It is Monday the 12th, and this is Christian Fromhertz from Tribeca Trade Group. And happy Veterans Day to all the veterans out there, and thank you for your service. It's my dad's birthday every year is on the 11th, so his birthday is either on Veterans Day or right around it. And he was in the Air Force too, so special thanks to him as well for his service. But let me start with let me get into the markets today because we got a lot to go over on a day where the bond markets were closed today. Pretty decent downside action in basically just just about everything today. Almost a full participation down. I don't think don't have one sector in the green today. Just even the defensives, which were in the green for a good portion of the day, actually finished in the red. So I'll talk a little bit about that in a minute as well. But yeah, so a lot of things going on, to a lot of negative news. It seems like it's a patient that is has multiple injuries and is losing blood all over the place. There's bleeding all over the place right now. It's in terms of the market, and last week's rally is a distant memory at this point. So S&P finished down 1.8%, and really, when you start to put these like 3 days together, I guess what you could say is, towards the what we saw last week, and then just a complete turnaround here. So very tricky markets to kind of stay. I would say perma anything right now. You have to really kind of change your view very drastically. To me, that's the only way that you're really going to make money in this market. And by the way, this video is for information purposes only. But the only way to kind of really make it through this right now is to position very light, in my opinion. Again, this is all from my opinion, and all what I'm doing is to position pretty light, and then also to kind of just try to be very neutral thinking, and try not to really say I'm perma bullish, or I'm going to stay bullish, or I'm going to stay bearish, because this market will have its way with you. But this is kind of, it just feels like I've traded through a couple bear markets in my day. Obviously, the 2001 was 2001 really was just drastic to the move down. Same thing with 2008, 2009. It just was ongoing, and it took a while for it to. The 2008, 2009 felt longer than what happened. Maybe it's also because it's more recent memory to me. But, I traded through all of that, and it kind of just feels like what's going on now. And I don't know if we're going to have the severity of that, but it's what a bear market just kind of feels like, where we do get bounces, but then they quickly get faded and the market turns the other way. So what I had in this weekend's newsletter, which was my and I still kind of stick by this because I think we are still trying to find a direction, but this may go on for a while. We may, after a big run up of what we've had for years, and I apologize, I did not have a video that accompanied this, which would have went nicely, but I was away this weekend. I had some family stuff to deal with. So, that's that. But if you kind of draw this back a little bit, right, and just look at this big move up we've had before, it may make sense that we just digest for a little while. I think a lot of people, you turn on the TV and they're talking about, could we get back to 52-week highs? Sure, we could do that. Could we continue to go down further? Possibility, but I don't hear a lot of people talking us going sideways for a while. And sometimes that's what happens after a big move. We see that in stocks sometimes after they've had a big long run up. Sometimes they digest and they bounce around like a ping pong ball. And that's kind of what this market is doing. So really difficult, and really difficult if you added trades, on this day last week. In hindsight, again, this market will always give you lessons. But when everybody was buying calls and the put to call ratio was really low, I mean, there was a good number of trades that I saw on this day, as well as even on Friday too, that I thought were interesting on the call side. So, that's the thing with option activity, is it can be really, it's really good to read the tape, and will give you a good flavor of what's going on. But a lot of times they are completely wrong, so you can't really hang your hat on when somebody buys calls. if you want to, what sometimes some traders do is when they see bullish option positioning, they'll go ahead and take a trade and then they'll take it off at the end of the day. We talked about that in some of the techniques to basically do for trading options right now and some strategy. Chasing right now is, I think, a big no-no, either on the long or the short side. Uh, Being patient, waiting for the setup, honoring stops. I will tell you, I added a couple things last week. I think I added PayPal on Friday because we saw a number of calls trade in PayPal, and I took them off today. So why did I do that? Why did I lock in a loss today? Because it's just not, to me, it's not worth it. The market is moving way too fast. I'm not really comfortable. If you're day trading, again, you could have a ball with this stuff. But if you're swing trading and you're caught on the wrong side, even though I think I was in January calls or February calls for PayPal, so I did give it. My idea was to be in it for a long time, but I can get right back into these things. I just do not like how quickly that these moves are severe. It's not like, hey, we're down 70 or 80 basis points, but no news in PayPal, down 3.4%. So and I did that last week too. A couple trades that I added. Again, not every trade is going to be a winner, and right now there's no way. There's no way that people are just going to completely spit out winner after winner in this market, because it's kind of impossible when we're not, especially when we're not trending, right? We're not trending right now, and that was also one of my arguments that I made in this weekend's newsletter, is that right now we are not in a trend. We've got a few up days, a few down days, and really heavy down days when they occur. So I think right now is sideways and we're trendless. So just to kind of categorize it, and again, I may be wrong with my categorization for the long term, but I think right now this is a sideways market, and I'm trying to trade accordingly to that, and really not put on any major risk right now, and be smart with positioning. So we've been able to find some really nice trade. The trade that we found on Friday that I traded while I was not in my office down on Wall Street was Colgate, and notice Colgate gave back a lot of those gains. So I left 10% of the trade on. I still have 10% of the trade on because it's a February trade. I was going to add to it at the end of the day, but again, it's just 10% of the trade, so I've already locked in gains. But man, we hit a real nice move, and then also for today, it was CVS. And this is kind of the stuff that I'm looking for. I'm a little bit more biased right now towards value names, because that's basically what I see in the charts is value. The CVS has to get out of, it did not close above value, so it could turn the other way. That's why I took 2 targets in the trade today, but I'll play for a little bit longer. If you look at some of the other names, somebody asked me today on Twitter, they said, well, what's the news in CVS today? I'm like, I don't think there's any news. I think it's just the way the market's been going. And I couldn't really explain this over, a tweet. But this is where where the strength has been in the market. And so this is where I've been hiding out for the last, I've been taking a shot here and there in tech where I think a name has been sold off too much. Walmart reports this week. I'm not in Walmart anymore, but Walmart was a heck of a trade that we put on, and we caught that trade before. I really think before anybody else. And I think I got out of it on this day, and I never did re-enter on this thing. But it's a much different picture when you look at what's going on in value versus growth right now. So that's where I've been kind of looking for the opportunities. I think XLU, I did not trade XLU or did not take it. But like I said, there was no sector, even like subsectors, which I don't have all the subsectors on my watch list, but I have the majority of them, and none of them finished in the green today. As you can see, XLU finished down, but I would watch this for, it did take out this version point of control, but if it takes it back over, I'm not opposed. There was a lot of November calls that went up today, but all of them were basically spreads that went up today. But this is on the top of my, or close to the top of my watch list, I would say. I went through this weekend, by the way, and I went through just an enormous amount of charts. And I didn't find much that I liked. I put the trade setups that I thought were interesting. I thought this one looks interesting. This is Dominion, which at one point was up like 2.4% today. But, for me going through doing all my chart studies, this was a very below average amount of setups that I liked. So, and even the ones that I found were not, ones that were jumping off the page to me. So, what that means to me is just take it easy on risk. Um, I can give you another example. Microsoft, I thought, had a chance. There was some two-way flow. There was a little bit of calls, and then there was heavy puts. So I'm like, all right, I'm staying away from this name. But this is down 2.5% today. So I didn't even get to today's catalyst. I will say this: there was two small software plays that were taken out. Normally, when that happens, there's all types of pin action, and similar names that are close to these names go up in sympathy. You didn't get any of that today. So it just tells you how hard this environment is right now. IGV, which has been seeing outflows, was down 2.9%, and look at where this is from where it was last week. Turning up, it looked great above the 200-day moving average, and then just completely falls all the way back down. So, I think at this point you just kind of take it one day at a time. Again, this market is moving too fast, right? For putting on any decent swing trades, at least where you're not taking targets. You could, what I'm doing is leaving the last piece of trades on or the last half of a trade on. But to try to basically position swing trades right now, I think is very difficult. Looking at the cues, by the way, I mean, some of these are just, if you go through the numbers, and I'll talk about Apple in just a minute, but I mean, the move 4.4% down in a whole sector ETF. And if you couple this with the last 2 days, we're talking about like a 6 or 7% move down in just 3 days, 2 or 3 days. Just kind of puts things in perspective, how quickly things are moving. And if you are okay playing things on the short side, you could take advantage of this because we seem to be kind of trending on some of these days. There are a lot of big red candles and some big green candles too. So it does seem that you could definitely, if you're very quick and nimble, can play this stuff on both sides. So I'll talk about Apple. Yeah, I mean, Apple is now getting down to the 200-day moving average. I'm kind of watching for this VPOC to be taken out, this version point of control, which is right at 190. That's a little bit below the 200-day moving average. That's what I'm looking at. But if you're a long-term investor, at some point, clearly this looks like now a head and shoulders pattern, but probably the measured move is probably somewhere in here. So you could start thinking about starting to maybe think of going out a couple months and selling some put spreads. I'm not there yet. I think I did a tiny trade. But that's it. But I'm not really there yet in terms of putting on any major risk. Now, of course, this light story brought down, everything in the space, and it seems like so. One point where we want to get to. Geez, look at the volume on that. Finished down at $37, but where we want to get to and what you want to start paying attention to as a trader or an investor is when bad news happens and nothing goes down. Right now, we're not there yet. We're not even close, right? Anytime there's bad news on the tape, things are getting whacked. So things are not nearly priced in yet. And now switching towards financials, Goldman Sachs, what a move in 2 days, down 10% in 2 days on this Malaysia story that they want proceeds back, but this doesn't. This, what a fake out, by the way. If you've been listening to my videos for a while, you know that I've been underweight financials for a long time. That's I could get into that for 10 or 15 minutes, which I'm not going to do here, but I just don't think that they're the same companies that they used to be. Their margins are shrinking all over the place. They're not making money like they used to. They're not generating fees from investment banking like they used to. The trading side is a much, much harder environment than it used to. They're not making commissions. Back in the day when I was trading on the institutional side, hedge funds were paying 3, sometimes even 5 cents per share. Most of them don't even pay commission anymore, to put that in perspective. So that's a pretty decent change. Forgetting about whether they're making smart decisions, but that's just how it is nowadays. Their institutional trading partners, nobody's paying, hardly anybody pays commission anymore on any trade. So that was a big source of revenue, especially if you were committing capital, putting up trades for risk blocks, which was what I used to do. But that's, becoming harder and harder. Watch this XLF. I think it failed at the 50-day moving average. I put on a very small trade, basically targeting that bottom of value today, 25. Listen, if this stuff is going to crumble, I'm not just going to sit on the sidelines, but you could find some cheap trades. I think I went into some December. I'll quote you, and I did not send this out as a trade alert today, because again, it's not that big of a trade. I think it was just a $600 trade for me. But these I put on the December 25 puts. If there's going to be more pain in financials, notice that this is just rejected the 50-day moving average here and has been melting down. Just the first big red bar down 2%. And I don't think this is oversold or anything, so I think financials could head lower. By the way, nice bounce off the VPOC down here. Again, again, there's a ton of things to talk about today. I could probably spend 45 minutes, which I'm not going to. But I talked about this UUP. It did take out a VPOC. This is the 26. I retweeted. I don't retweet my stuff all the time, I promise you. But this was the 26 VPOC that I just saw lingering up here. And I talked about the weekly chart. So again, when this strengthened the U.S. dollar, it's a major headwind. And we talked about that in last week's videos as the dollar was stronger last week. We are now above value. I thought we would. So we'll see. This is just this is a weekly bar. So we only have one day of this. And the target that I thought was lingering and needed to be taken out was, right? That's 26. So again, that needed to be taken out. And now we'll see if we sit back down. I think that would also be a potential bullish event for that to move down a bit. Okay, so we went over the dollar. Of course, this has a lot of ramifications on emerging markets. Emerging markets, I tried to trade last week in emerging markets, and I got out of it a day later. And again, this is what trading is all about. If you got to, if you try something here on a break of the 50-day moving average, and I was looking for this to move higher, but if it fails at the same point, right? We talked about this, how it's been honoring the 50-day moving average so very well. Since it broke the 50-day, here, test fail 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 here. So I tried it again. There was no recent low, so I thought we saw some divergence in price versus the RSI. But that's as far as we went. So I tried it, and I sold it the very next day. And look at this thing crumble. So, good thing. I would have lost my whole option trade premium there. So that's what I was talking about in the beginning of the video, just being quick and saying, hey, I would rather have a small loser. On this one, I think I had about a 25% loser in the options. This was a starter position for me to try along in emerging markets. Did not want to jump 2 feet in, but I would rather be out with that kind of a haircut than losing the whole thing in option premium. So again, honoring nice stops, which is again something going back to my newsletter here. So we'll have to see. I think we're getting really, if you look at talked about how a lot of things, the percentage move in some things over 3 days. If you look at where I tend to look at for really oversold in the short term is the 1 hour. So the 1 hour bar in the Qs, the RSI is a 20. So we may be setting up for a bounce, but that again, bounce, right? It doesn't mean that that's a change in direction. It just means we may get an oversold bounce here Tuesday or Wednesday. Keep in mind, Tuesdays and Wednesdays have been the really nice green days of the week. It's either one or the other usually, or I think we had last week was probably both maybe. But it's usually one or the other. Tuesday or Wednesday is the day. I don't know if the buyback machines are on that day, but I would watch for either a nice decent bounce, and I am long a few Q's calls going into tomorrow's open. And I will tell you right now, if we get a nice green open tomorrow, I'll probably be out of those Qs because I think there are some good overnight trades that you can also do in this environment. So, like I said, I could talk for another 20 minutes, but I will hold here. Basically, bottom line messages. Right now, we are moving in a sideways trend, even though it's very and the market is moving very fast. So, I remain cautious on this market and cautious in how you're positioning. So that's it for me for today. Have a great night. See you tomorrow.